Good evening, everyone. Welcome to a new episode of Investing Fool, where we talk about DIY momentum investing. Today, we'll talk about the portfolio. So, we made a change in the constituents yesterday. So, one stock we exited and one stock entered the portfolio. So, I had posted about this on YouTube on the channel. So, and that is why it is not always possible to make the video the same day to let you know about the change. So I always make it a point कि अगर मैं कुछ change कर रहा हूँ तो I will post about it on the channel. So if you do not want to miss such updates, in case you are not subscribed but you watch our channel regularly, so please consider subscribing to this channel. Okay, so we'll try to keep this video short. There are a lot of news and stuff to uncover about the portfolio, and we'll also discuss about the change, and in the end we'll talk about two stocks that are probably gaining some momentum after being a little bit flattish or sideways for some time. We have discussed them before, but we'll rediscuss them today. So please stay on till the end and let's get started. Before we start, the familiar disclaimer that none of this is meant as a financial advice. So please consult your financial advisor before making any investments. It's your money and you have to take care of it, right? So everything that is here is for informational and illustration purposes only. And I mean this, like I am very serious about this. That's why her slide में लिखा रहता है कि no financial recommendations at all, right? So that it's driven into our head, my head as well as your head, that this is just for educational purpose. So let's start with the portfolio overview, right? So in the recent past, not in the recent past, so in today's session, I'll say defense shares saw some minor pullback. And in the last week, pharma and auto indices have been outperforming the other indices. So if we see today's performance on the portfolio sheet, and for those of you who are new to this channel, like this portfolio is live, you can find it in any of our video descriptions. This is our core portfolio. We have another portfolio called Nifty Top 10. उसका भी link रहता है video में, so you can go and check these out anytime. Anyway, coming back to the gainers and losers today. So if you see the defense pack, right, HL 1.6 down, Cochin Shipyard was down like almost 4% intraday, then it recovered a bit at the end. So 0.3% down. We see BDL, BEL both down. Then GRSE, which we recently added, our stock का नाम मैंने अभी disclose कर दिया. Anyway, I had posted about it yesterday, so that was also down in today's session. If we look at the gainers, Torrent Power had fallen quite a bit yesterday, so it's basically going nowhere, rising some day, falling some other day. There is कुछ नहीं पता कि stock कहाँ जाने वाला है, right? So 3.3 gained. Then we have Zomato at 2% gain, Inox Wind at 1.5% gain. So this is मोटा मोटी portfolio में ज़्यादा कुछ हुआ नहीं है. From the last time we had discussed about all these stocks, mostly they have remained the same, but the change is coming in the manner that what was trending earlier. Somewhere some kind of rotation is happening. Maybe some stocks are losing touch, some other sectors might be coming in to become the new momentum stocks. And if we see, we are back to that stage where the portfolio is not performing as well as the index. So if you see today's return, we are in negative while the portfolio is effectively 0.5% higher compared to us. If we look at the all-time returns, which is absolute returns, and I've gotten questions about this also to have CAGR and XIRR. So guys, the issue is that XIRR is important when you are like adding new cash flows, right? There are cash inflows or outflows at different time periods. That's when XIRR really makes a difference in terms of your portfolio return. In this portfolio, we are not adding any additional capital, right? We started this experimental portfolio with 20 lakhs nominal, 1 lakh divided in 20 stocks. From there on, we are just like reaping the benefits of whatever gains these stocks are giving us. So we are reinvesting that money in other stocks and all that, but we are not adding any additional capital, or there is no outflow, there is no inflow at different points of time. So XIRR is may not be that relevant. What will be relevant for us going forward is CAGR, but given the name itself, CAGR, it makes sense only after the portfolio has completed 1 year, right? So that's when we'll start showing the annual returns, effective returns. So anyway, we'll add that when the time comes later this year. But if we take a look at the absolute return since inception, we are maybe 9% above the index. It's a very, very strong bull market, bull rally, whatever you want to call it. And we have been fortunate. We just have been plain lucky to be invested in some of these stocks. If you see Cochin Shipyard, the last time we had met, I think it was around 198% or 199% net change. If we see, it is the first 3xer in our portfolio. So we bought it at 897 and it has gained more than 200% in this very short period. Moving on to the sectoral indices. As we discussed, pharma is doing good, auto is doing good, FMCG has also started to run a little bit. I think the Marico numbers were good. They were shared recently, and let's see how these stocks how these sectors perform in the long run. For now, in terms of the screener, we are not seeing any major changes as of now. Okay, going back to the slide. So we changed something yesterday. We changed a stock which you would not be seeing in the portfolio right now, and we have added another stock. So there is no like secret या ऐसा कुछ नहीं है कि वीडियो को एंड तक देखना है स्टॉक का नाम बताने के लिए, right? In simple words, like I'll just disclose it right now. So we have exited BSE, Bombay Stock Exchange. It's a mid-cap stock. It was a mid-cap stock in our portfolio, and we have entered GRSE, which is we had discussed about the stock before also. So Garden Reach Shipbuilders and Engineers. It's a mid-cap defense shipbuilding PSU. So what is this thing about, right? Because it was not a rebalancing day. So why did we make this change? So there are essentially, if you remember the strategy, if you have been following the strategy, there are two kinds of exit criterion that I always say. So the primary exit criterion is, it's not a primary or secondary, it's basically both of them go together, kind of. So what we see on a rebalancing day is whether some stock has fallen below 50th rank. So anything that is in 51 rank or after, we will kick that stock out of the portfolio, right? It's as simple as that. So that happens every 2 weeks because we are rebalancing every 2 weeks. Okay, now after every week we do a weekly review where we basically just see what all has moved in which direction, and during these instances we might come across scenarios when a particular stock has dropped more than 25% from its all-time high. And if you remember, like in the screener also, this is one of the criterion. So if you see away from the all-time high, we have within 25%. Now you can take like 20%, 25%, whatever it. So momentum in general is a very forgiving system, right? We talk a lot about like small things here and there. But in the overall, in the long term scheme of things, these minor things may not matter that much. Anyway, coming back to the discussion, so we have this secondary exit criterion also, that whenever a stock loses more than 25% from its all-time high, we exit it. Now this exit is not dependent on the rebalancing day. So you can do it, like if you follow your portfolio every day, you can do it the same day also, you can do after a weekly review also, you can do on the rebalancing day also. So I could have waited another 7 days for like July 15th when our next rebalancing is due to make this change, right, to remove BSE. But it doesn't make that much of a difference, right? There would be some churn additionally. If you want to prevent it, you can wait till the rebalancing day also. But in general, the trajectory is the same, like the direction is the same, right? It just may be a few days before or after, right? In the long term, these things would not make a huge difference. What probably can make a huge difference is whether you apply this filter in the first place or not, right? Whether you have a percentage deviation from the all-time high. So some people do not have it, some people have it. So oftentimes the momentum ranking itself will follow something like this, right? So now Bombay Stock Exchange has, like the BSE stock has fallen more than 25%. So the stock itself is not appearing on the screen anymore because of the filter that we have applied. If you remove the filter, the rank is still like 84, right? So the rank has already gone much beyond 50. Okay, so even if I wait till like 15, from by using the primary criterion also, it can happen that I can just use that much, like only that criterion to remove BSE as well. So it is kind of a personal call. I employ both these filters, and personally I do this like 25% fall from all-time high after a weekly review. It can bite like both ways. In a very sideways market, these things can like whipsaw a lot. So to minimize the churn, rather than doing on the same day, we can maybe like wait for 1 week to end, confirm it, and then exit out of these stocks. For example, I'll just give another example. For example, if you see Motilal Oswal here, right? So Motilal Oswal just today, it was gaining intraday, but by the end it fell by how much? I think around 1% or something. Let me check. So 1.5% it fell. Okay. So with this 1.5% fall, now Motilal Oswal has come to that range where it is more than 25%. Like it has fallen more than 25% from the all-time high. But if we like search here, right, Motilal, if we look at the rank, it is still at 45. So this is a situation, like if this happens like this on the rebalancing day as well, that the the rank is not here. I mean, the rank is still within 50, but the stock has fallen more than 25%, right? So that is another indicator of something losing momentum. Although a lot of small caps and micro caps can go up and down a lot, but that is in general another criterion that something is falling off the cliff. So when you think about it like that, so in this case also I would have exited even if the stock is below like 50, but since it has fallen more than 25%, I would just exit the stock, be it rebalancing day or be it after a weekly review day. So the time of it, you can decide. It's a personal call. Over the long term, it won't make any difference. But whether you employ the two filters or not, that will be the more important call in terms of whipsaws and churn to your portfolio. Okay, so we have exited BSE and we have entered GRSE. So we'll talk about these two stocks a little bit in the following slides. And since the exit stock was also a mid cap and the entry is also into a mid cap stock, so the portfolio composition in terms of the market cap distribution, how much we have in large cap versus small cap versus mid cap, that has remained the same. Okay, now some news items regarding some of our portfolio stocks. So Inox Wind recently bagged a 200 megawatt order in the Gujarat and Rajasthan regions, states. So the stock was up today. In today's session it was up, but not by much. Actually the stock is not doing much, so 1.6% up in today's session, but it is like hovering around that recent high. It has not been able to pull away and go above that high. So once we get that confirmation that it has actually broken out, then only some kind of strong momentum can come in Inox Wind. Otherwise it will just keep teetering around that area. Another news item, Bajaj Auto, you must have seen, recently launched the CNG bike, which is I think Freedom. It's named Freedom, and didn't do much for the stock. Stock is not free. Stock abhi ka wahi hai. It has kind of had a pullback from the all-time high, so I'm not sure when it will reach the all-time high. Zomato has gone on to create a new all-time high, and we'll look at it in some further detail later. We'll look at the charts. Kalyan Jewelers, which is one of the few consumption to nahi bol sakte jewelry stocks in our portfolio, has posted a 27% revenue growth. Healthy numbers, not very exciting or anything in Q1 FY25, and this was led primarily by the India growth and the Middle East growth. And I think the company is looking to establish a foothold in US, probably opening its first US store sometime this year. Another news item that came recently is that India is planning a 44,000 crore investment via PLI schemes in the electronics manufacturing sector, and this will likely be spread out from like 2024 to 2030. Now the 44,000 crore is probably not important. What is important is that of that 15,000 crore is going into the products manufacturing like assembly, sub-assembly and parts. So this might help companies like Dixon, which is there in our portfolio, as well as some other companies which are in this space. But Dixon could be a huge like beneficiary of such PLI schemes if they come, and we'll have to closely track the budget and other news items for wherever government declares this, and we'll see how it proceeds. Hopes of US Fed rate cut have increased in recent times. Gold is gold is rising a little bit, but not gaining any strong momentum. But if rate cut comes, and now many people are saying that there could be one in September and another later in the year, in probably in the last month, then gold prices might appreciate. And I always say that asset allocation must be in place. Asset allocation is different from your momentum portfolio, your like just focusing on equity, just focusing on momentum, right? It remains on the side, and it helps you contain the volatility of your overall portfolio when momentum isn't performing or equity isn't performing for some reason. So you should always have a healthy share of gold in that portfolio. It can be like 25%, 30%, 40%, whatever you want, but somewhere in that ballpark, or maybe even 15%, right? It's not easy to allocate a lot to gold when at least in a market like this you want to deploy everything you have, every last penny you have in the stock market, in the equity, but you have to realize that the times can change anytime. So gold will arrest that fall at an overall portfolio level if you have it there. Anyway, so Motilal Oswal, I just talked about it. So Motilal Oswal, I think I lost that train of thought. It has fallen by more than 25%, right? But I'm not selling it tomorrow. So I'll like, because I'm not doing it after a weekly review. So I'll just wait on 15th. Anyway, we have to make certain changes. So I'll evaluate it, and by the time, if it still has more than 25% fall, and maybe by that time it would have like fallen out of the top 50 as well, then anyway it will exit. If we exit Motilal Oswal, then the next best stock as of today's ranking is going to be Motherson, that will replace Motilal in our portfolio. Okay, now let's look at the chart of BSE. So BSE has given us a lot of pain. We have already exited this stock 2 times in loss. So the stock had a very good momentum here, like in this till December 2023, and then it sort of like went sideways for no reason, gave a false breakout again, like met this resistance, came down, crossed its 100 DMA. So you can see this red line is the 100 DMA and the blue line is the 200 DMA. So it fell much below it. Then at this time we had exited. Somewhere around this time we had exited, and I think then it started running up again. It ran crazy in a very, very short period of time. And again we entered somewhere around this mark. I'm not sure, like we can check, but somewhere around this mark we entered, and then it again went up after some days and again crashed down. Then from there on it has been going nowhere, like slowly sliding down, down, down. It crossed the 100 DMA and might soon cross the 200 DMA also. So if you see, like here, the 200 DMA, the gap was quite much, but if you see over the long term, right, so it has basically come back. So we are standing in July of 2024, and it has basically gone back to December 2023 price. So we are at the same level, right? So we have not moved. The stock has shown signs of brilliance in the middle, but overall if we see, in the last 7 months nothing has happened. But because it was there in the ranking, it stayed on in our portfolio. And momentum, I always say, right, is the game of having the right amount of patience. So momentum takes time to confirm that a trend has ended, right? It cannot confirm very quickly, okay, aaj khatam ho gaya momentum, nikal jao, kal aa gaya momentum, ghus jao, right? It doesn't act like that. It takes some time, and that's why we can never get in at the beginning and get out at the top. We always have to confirm that the momentum has finished before getting out. we always have to confirm that momentum has lasted before getting in, right? So there is an element of time in the entry and exit. So that is something that we should keep in mind. Motilal Oswal, we just discussed the stock. Again, you can see all these like brokerage kind of companies, even Anand Rathi has not been moving much, but I think the ranking is still pretty high here. It's still ranked 5. If we look at Motilal Oswal's chart, again, rising some days but then steadily falling down. It has been falling for so long, and it may exit on July 15 again with a loss. The tricky thing is that we have I think we have exited Motilal Oswal also twice, both in loss, but that's the another thing about momentum. You cannot be biased. I cannot think कि अब BSE 2 बार मेरे को लॉस देके चला गया, so next time BSE comes in our screener I would not buy it, or next time Motilal Oswal comes in our screener I would not buy it. It cannot be like that. If there is whipsawing, you can see the kind of trend that is there. Like compare this with Zomato's chart or something. It's going up, down, up, down, up, down. So there, if that is happening, that's not your fault. That is not the strategy's fault. It's just what it is, right? You have to face it and move on. You can't do much about it. So anyway, momentum Oswal nahi, Motilal Oswal, but anyway we are not talking about Motilal Oswal right now. We will talk about GRSE. So GRSE is the new addition in the portfolio. If you can see here, it was the next best stock. So Cochin Shipyard we already have, Trent we already have. So GRSE was the next best stock that we do not have in our portfolio as of now, right? So when BSE exited, we just deployed that. Rather than being in cash till the next rebalancing, we just put that into the next best stock, which is GRSE. It's a mid-cap defense PSU, market cap of around 29,000 crore. Builds washes for the Indian Navy. You must have heard of like the Kamorta class corvettes, sorry. And there are like I think there are a bunch of ships which are named after the islands of Lakshadweep, like INS Kavarati and INS Kilton and all these. They usually go on long deployments, sometimes in the Malacca Strait as well. So these ships were constructed by GRSE. It's an old like shipbuilding company, and it's probably the first one in India to reach 100 warships. And today, although the defense sector was not going that strong, like all stocks were falling, but we'll have to see what the budget provides for the Ministry of Defense, because that is going to be a lot seems to be priced in. There is always a risk that you will be catching some stock at the top. If you look at GRSE, right? So GRSE today it fell almost by 4% in intraday. And it can fall much longer, right? The kind of rise it has had in the last few sessions, it can fall much sharply, but that's a risk you always take with momentum. It's a high beta strategy. You always run the risk of catching something right at the top, right at before it starts falling. So that can happen anytime. We do not know when it will happen, but till that doesn't happen, till we do not get that confirmation signal, we will keep investing as per our strategy. So here you can see some pullbacks here, then otherwise, like the rise has been phenomenal, but some corrections were due anyway after such a rise. So probably it will take a breather and then move on, but we'll see how the defense pack as a whole performs over the next couple of weeks, and as the budget is announced, what impact it has. So export orders have been there for GRSE. We had discussed this in the previous video, and for the other shipbuilding companies as well. There is a lot of potential growth that can happen in the coming years, and that is driving the frenzy in terms of everyone is trying to get in. You must have seen like Motilal Oswal launching this defense mutual fund or something like that, a thematic fund. Lots of money coming in, so we do not know when this frenzy will stop, but yeah, let's ride it while it continues. The stock has a PE currently of 83. It's I think lesser than Cochin Shipyard. RSI currently of 78. That's also almost similar to Cochin Shipyard. And yeah, that's pretty much it about the stock. And you can see the meteoric rise over here. And let's hope it continues to go up like that. Now we'll discuss two other stocks, which so the first of them is Zomato. If you look at it, then the stock was not doing anything from the mid of May, right? And almost for close to 2 months, it was down, and then it started inching up, crossed this high like a week ago, and then it has been trending upwards, showing strong momentum. We are not sure how far this stock can go, but if we look at our portfolio, it's currently um, at a at a return of 36%. So the stocks like keep going up and down, and you have to remember when you look at the like chart of Zomato, right? So Zomato was falling, it was falling, but it never went outside that 50 ranked criterion, and it never fell like more than 25% from the all-time high also, right? So it never met our exit criterion. So it came down, but it remained within a channel which we can say that okay, it is still in momentum when we look over the long term, right? So and then it started the pickup again, and it created a new high. So you cannot give up here, right? You cannot have very tight filters so that the moment you like drop 10% from the high or something, then you're exiting the stocks. It cannot happen like that. You have to give the stocks some time, some breathing room for them to come down, maybe like consolidate over long periods. Like just look at Inox Wind, right? Inox Wind has been consolidating, and it's in the same range for like 3-4 months. I'm not sure. It has not broken out, but if we're still being patient with the stock, we're still keeping it in a portfolio in the hopes that one day it might go up. Or if it doesn't, if our exit criterion met, then we don't have any problems with throwing away the stock from the portfolio, right? But uh, we cannot be too impatient with momentum. If you see, Bajaj Auto had previously a better return compared to Zomato. Now Bajaj Auto has trended down a little bit, and Zomato has gone up. So, but overall, in the long term, both of these stocks are going up. The long term trend is still up, and let's see till where they go. Okay, the next stock that we'll discuss is Zydus. Zydus we had discussed earlier, and the stock has been creating new highs for the past 3 sessions. Pharma as an index is also bullish. So this is another instance of a stock which wouldn't move a lot. And if we see when we bought it, when we bought Zydus Life, where is Zydus Life? 15th March. So let's see, 15th March. So we bought it around here, right? We bought it around here, went a little up, then down, then up, then down, then up, then again down. And by the time we come to the beginning of June, the stock is basically exactly where it was like two and a half months earlier, right? So for 2.5 months, the stock hasn't done much. It is just lingering around there. Then again, it starts to pull up, and you're not sure whether it will come down or what will happen. It comes down a slight bit. It remains in this channel. If you like create a line here, then it is kind of like going in this very narrow channel. And once it hits the low, it is a higher low, and then it again goes up, crosses the recent all-time high and creates a new all-time high, and the trajectory is very bullish. Let's see where it goes. All these are like large cap companies also, so we'll have to be a little bit patient with these stocks. So that's mostly the thing that I had to share for today. So this is